So, Matt, there's a lot of changes on the horizon for FRS 102, the UK accounting standard. So can you give me an overview of what's changing?
Yeah, of course. There are changes which are coming in to bring UK accounting standards more in line with the international standards. These will be some of the biggest changes we've seen in years. The amendments are effective for accounting periods starting on or after the 1st of January 2026, so not long now.
That's great. What are these key changes?
Firstly, revenue recognition is being overhauled to a more structured 5-step model, similar to IFRS 15. That means companies may need to recognise different components of revenue at different times than they were before. Companies with long-term contracts, complex bundled goods and services, or variable consideration are likely to be most impacted.
And I've heard lease accounting's changing as well. What's all that about?
Yeah, so most leases previously treated as off-balance sheet will now be brought onto the balance sheet. So businesses will recognise both the right of use asset as well as a lease liability, much like under IFRS 16. Although there are exemptions for short-term leases and low-value assets.
Well, that all sounds like it could impact the accounts quite a lot.
Absolutely. Companies will need to keep an eye on the company size thresholds, which are changing next year, as it could result in a change in company size which could trigger an audit requirement. EBITDA and gearing ratios could also increase, bank covenants could be breached, and there is generally more admin involved.
So for businesses preparing for these changes, what should they be doing now?
Let's start by reviewing revenue contracts and lease portfolios, update systems and processes, and ensure your team understands the new disclosure obligations.
Look, Matt, that's a great overview. Thanks very much.
No problem. We'll be running a training session in the new year where we'll be covering these areas in depth.